Imagine waking up one morning and realizing the money you trusted your whole life is quietly losing its meaning. Banks are still open, apps still work, news anchors still smile, but behind the scenes something dangerous is unfolding. A hidden chain reaction, a financial death bag that has already been armed, and now the timer is ticking. While foreign banks quietly collapse one by one, something shocking is happening in the shadows. Silver, the metal most people stopped paying attention to, is being traded for prices you will never see on your screen. $150 an ounce. Not officially. Not on paper, but on the black market, where reality shows up before the headlines do. Most people won't see this coming. That's how every major financial shift begins. Silent, boring, ignored, until it's suddenly everywhere. And today, on Market Truth Archives, we're going to walk through what's really happening. Why banks outside the US are cracking first, and why silver is becoming the escape hatch for those who understand what is coming next. Before we go any further, if you value honest market conversations without hype or fear-mongering, take 1 second to like this video and subscribe to Market Truth Archives. It tells the algorithm this content matters, and it helps this channel keep exposing stories most people never hear. You don't want to miss what's ahead. Now, let's slow this down and connect the dots. Because this story didn't start yesterday. For years, foreign banks have been operating under stress that most Western investors never noticed. Negative interest rates, massive government debt, aging populations pulling money out faster than it comes in, currency manipulation to stay competitive, all of it layered on top of risky derivatives and paper contracts. That assumed the system would always keep moving. But systems don't fail all at once. They fail at the edges first. That's why you're seeing banks in Europe, parts of Asia, and emerging markets wobble. Before the big names in the US, these institutions are trapped. They can't raise rates without breaking borrowers. They can't cut rates without destroying their currencies, and they can't admit losses without triggering panic. So instead, they delay. They merge. They quietly get rescued. Or they simply disappear from the headlines. Here's where the death bag idea. Commessi, imagine a bag filled with financial explosives, bad debt, overleveraged positions, paper promises backed by nothing physical. Now, imagine that bag being passed from bank to bank, country to country, balance sheet to balance sheet. Everyone knows it's dangerous, but no one wants to drop it. Eventually, someone does, and when that happens, the detonation doesn't stay local. Shockwaves travel. While this is happening, the average investor is still focused on stock prices, interest rate headlines, and short-term moves. But the smart money is doing something very different. It's preparing for trust failure, not a total collapse overnight, but a slow erosion of confidence. And when trust fades, people don't rush into complex assets. They move toward things that don't need promises. This is where silver enters the story. Silver isn't just a shiny metal. It's money with a long memory. For thousands of years, silver was used because it couldn't be printed, frozen, or deleted with a keystroke. Today, silver is officially priced through paper markets, futures, contracts, and digital trades that claim to represent real metal. But here's the problem. There is far more paper silver than physical silver. And that gap is now impossible to ignore. In certain parts of the world, especially where currency controls are tight, and banking trust is low, physical silver is trading at prices that sound unbelievable. $150 an ounce. Not because people are greedy, but because they're desperate to get out of the system. When banks limit withdrawals, when currencies lose value overnight, when inflation eats savings alive, people stop asking what the official price is. They ask one question only. Can I hold it in my hand? Black market pricing is not about crime. It's about reality. It's what people are actually willing to pay when the official system can't deliver. And right now, silver is becoming the bridge between collapsing trust and real value. Foreign banks are feeling this pressure first because their citizens have fewer options. In the US, the dollar still acts as a shield. For now, but shields crack slowly. Then suddenly, as foreign demand for physical metals rises, inventories drain. Premiums rise, delivery times stretch, and eventually, the paper price and the real-world price no longer make sense together. This is how disconnects begin. Not with panic, but with quiet shortages. Not with headlines, but with whispers. Dealers saying, "We can't get it." Vaults delaying shipments. Contracts rolling over instead of settling. These are the signals most people never notice. Until it's too late. Think about this. If silver were truly worthless, no one would be paying triple-digit prices off the books. The black market doesn't care about narratives. It only responds to fear and necessity. And fear right now is not about missing gains. It's about losing everything, trapped inside a failing system. On Market Truth Archives, we don't tell you what to buy or sell. We tell you what patterns mean. And the pattern here is clear. When banks fail quietly, metals move loudly. Even if the volume is hidden, when currencies weaken, physical assets strengthen. When paper promises multiply, tangible goods become scarce. This doesn't mean tomorrow everything collapses. That's not how history works. It means pressure builds. It means stress fractures spread. And it means those paying attention are already repositioning, while everyone else is still arguing about headlines. If this resonates with you, drop a quick comment saying, "I see it." It helps the algorithm, and it tells us you want deeper breakdowns like this. Now let's talk about why silver, not gold, is showing the most extreme signals. Gold is controlled, monitored, and heavily centralized. Silver is messier. It's used in industry, electronics, solar panels, medicine. It gets consumed. It disappears. And that makes physical shortages harder to fix. You can't just flip a switch and create more silver supply overnight. At the same time, years of low prices discouraged mining investment. So when demand spikes, supply doesn't respond fast enough. That's when price suppression breaks. Not gradually, but violently. Foreign banks tied to industrial economies feel this first. When manufacturing slows, loan defaults rise. When exports weaken, currencies drop. When currencies drop, people flee to hard assets. It's a feedback loop. And silver sits right in the middle of it. The reason you're not hearing this on mainstream channels is simple. It challenges confidence. And confidence is the glue holding the financial system together. Once people start asking uncomfortable questions, things move faster than anyone can control. This is why conversations like this matter. This is why Market Truth Archives exists. Not to scare you, but to prepare you mentally. Awareness is not panic. Awareness is protection. As we move toward the end of this video, here's the key takeaway. Bank collapses don't announce themselves. With sirens, they whisper through restrictions, mergers, and unexplained policy changes. Silver doesn't explode in price on your app first. It moves in back alleys, private deals, and desperate transactions. By the time the official numbers catch up, positioning is already done. If you found value here, share this video with someone who still believes everything is basically fine. Sometimes one conversation is enough to change how someone sees risk, and I want to hear from you. Do you think black market pricing is an early warning sign, or do you believe the system still has this under control? Drop your thoughts in the comments. The best discussions always happen there. Stay curious, stay grounded, and remember, truth doesn't shout. It waits quietly for those willing to listen. This is Market Truth Archives, and we'll see you in the next one.